Hey folks, Dan Frio here, the Mortgage Update, and today is October 23rd, and let's get at it. So, what happened today? And again, if you're watching this channel, please don't forget to give me a thumbs up, subscribe down below, and share this out to any friends that you have that might be looking for a home, looking possibly to refinance, especially those if you have any relatives, friends, neighbors that are realtors or in the mortgage business, they can find huge value in this channel. So let's go over what happened today. So as soon as we pop up, you see this number, which is great. For those that follow me, green is good. So let's get to the markets. Breaking it down, the mortgage-backed securities market this is the instrument that controls or dictates mortgage rates. Believe it or not, it's not the 10-year Treasury. It's this instrument right here. We were up 13 basis points. That's a good move for us. So what happened today? So basically, we still hear the news of, Brexit in the background. And hold on, I'm sure it's in here somewhere. UX stocks trade, Boeing, this, that. Here it is, Brexit. So the Dow's up 40 or rose 46, mixed earnings, signals a trade, Brexit. Okay, I'm going to go over a little bit of what I found out at Brexit. I've been studying this hard today, believe it or not. I knew kind of some of the fundamentals behind it. I've been studying this all day, and I'm still kind of confused, but I'll give you my perspective on this kind of at the end of the video. But you see here, Treasuries, they came out pretty good today. There was an auction. And you see U.S. stocks ended first. So I won't get to this. So what happened today that actually caused some of the move or this move up in the yields? Okay, so let's get to it. If you watch my channel daily, I was predicting that we were going to hover around this line and start moving up a little bit. Well, I missed a bump here. My apologies. And there was some news. It was kind of not really. It came out that Brexit was passed, and then it wasn't passed, and the market, jittered right through here. You're talking a 2-day time frame. Now we're back up to where I thought we would be, and I'm still predicting things to kind of move up. Okay, so that being said, what do we got here? Let's see. Let's go to the market wrap. This is another tool that I use in my arsenal of information that I share with you guys. So what happened here is the Dow was up a little bit today, which was good. I don't know how this happened, and I'll get to that in a minute. S&P was okay. But let's get to some of the fundamentals. Yesterday we had a housing index come out saying year-over-year housing prices were up at 5%. This is another study done by the Federal Housing Finance Agency, and it shows year-over-year we're getting a 4.6% return. I take that back. Yesterday's report we were just under 6%. So these are two variations of reports we get. So we'll blend it out and say we're right around 5, a little bit higher than a 5% year-over-year appreciation on homes all over the country on average. So again, if you're out there renting, your rent probably just went up this year. And on average, I think it's going up 6% in a lot of areas year-over-year. Okay, so when you're paying rent, what are you doing? You're paying your landlord's mortgage. Okay, so you're paying down that person's mortgage. He's getting an appreciation on the home of about 5 to 6%. And plus, he's getting a lot. That person, the landlord, is also getting a lot of tax benefits from this. Okay, so this is some mumbo jumbo through here that you're really not concerned about. It's giving us, where's a lot of the mortgage business coming from? And it was refinances. It still kind of is refinances. Then this gives us a trigger on where rates are and what they've done in the past week. We went from 3.9% to about a little bit over 4%. So we're over 4% right now. Okay, so what's going to happen tomorrow? These things will affect the market. Trust me, they'll affect the market. We have jobless claims from last week. That's going to make some changes in the market. I'm going to start seeing some slowdown in a lot of these areas. So jobless claims, I think, are going to be up. That's my prediction. New home sales are kind of going to be flat right about now. Maybe a little bit uptick there. And the 7-year note auction. Okay, so what's going on with things? that might be making some changes for us here. Okay, a few things. One of the issues that we are seeing right now is Brexit. Okay, what happens in Brexit? Brexit is a part, the UK is a part of the European Union. The European Union after World War II was created to make, instead of having a few, a bunch of little countries, they all joined together, 28 of them, to create, sorry about that, that's my dishwasher beeping, to create what they call the European Union. Okay, right now, the UK is looking to pull out of that. Well, the UK is the second largest trader with the US. Well, the problem that we're going to have is if they exit from the European Union, there's a lot of things that they're going to be tied up with. One thing is trade. Who can they trade with? And they're going to have to make new trade agreements with who else but us and everybody else all over the world. So that's huge uncertainty for the UK. And then there's a whole bunch of other things. But what's affecting us here is we're saying, that's a second largest trading partner with us, the US. That's going to cause some issues. Those issues are manufacturing's already starting to slow down. Well, if our trade partners, if there's uncertainty there, are we going to be able to work out deals? What are they going to be? Well, they might not be able to buy as much stuff from us, so manufacturing will go down. Then what happens if manufacturing starts to go down? Well, people start to lose their job. What happens when people start losing their job? Well, debt increases, bankruptcies start, people stop paying their bills. It's a snowball effect. So that's basically the UK issue that we're having right now. Okay, so that's one issue that's coming out. The next issue that we're having right now is three of the big U.S. companies, Caterpillar, Texas Instruments, and Boeing, all came out and missed earnings big today. Big. Okay, so now we have manufacturing slowing, profit margins as companies going down. What's going to happen? Well, the companies, they don't care about people. They want to make their profits. So what do? Start letting go people. What happens if people get let go? They don't have a pay. What happens with that? They can't buy goods and services. What happens with that? Starts even the snowball effect, making things even slower. So uncertainty in the UK, uncertainty with earnings, a whole bunch. And then you got the impeachment, you got the China trade deals, you got all this other stuff piling up, which is causing uncertainty. My prediction, if you roll down here, this is going to say, hold on one second, right here, and I'll get you to another page. It's saying cautiously float. I apologize, it's right here. The analyst here is, not float, a locking biased. I'm on the other side of the fence. I think things are going to start going up again, meaning up is good. This is the price of bonds. Prices go up. Yields or interest rates go down. Okay, so the prices go up, as they go up, interest rates come down. That's basically the whole math behind it. All righty. What we also have is the Federal Reserve meeting coming up next week. So we have a lot of uncertainty in the world. So what did I always say? Uncertainty in the bond market is good for us. People, they're less likely to buy stocks. Stocks are starting to come down. Companies are missing earnings. Things are slowing down. Manufacturing. People are starting to become unemployed. What happens is you're not going to buy into that company. So you pull your money out. You sell that stock or that company's stock. Where do you put the money? Well, you put it in either mortgage-backed securities or treasuries. A lot of people load up on this because the treasuries are so fluctuating, but mortgage-backed securities are a good tool for a safe haven of your monies. Okay, so that's what I'm saying. So my prediction is we're going to see some manufacturing numbers slowing down even more. We're going to see more companies missing earnings. We're going to have an unemployment figures come out that there's more people unemployed right now. This is my take on it. So there's a lot of this stuff is coming tomorrow in the next few days. What's coming out next week again is the Federal Reserve meeting. I'm now after some of these missed earnings and the Brexit deal getting delayed, I am now maybe teetering on the point that I think the Fed might make another move to reduce the federal funds rate another 0.25%. And tomorrow we will talk about what does the Federal Reserve control. If you watch my channel every night and you follow me on the radio, you'll know the answer to this. But for those that don't follow me and don't follow the channel, tomorrow will be a good episode for you. So we're going to go over, what does the Fed control? Do they control mortgage rates? When they drop the rate 0.25, the federal funds rate, they say that we're coming out, we're reducing rates by 25 basis points or 0.25%. Does that mean all of a sudden mortgage rates are 0.25% better? No, and we're going to go over that tomorrow. So again, my name, if you don't know me, I'll just give me a short little caption. My name is Dan Frio. I'm a mortgage advisor in the Chicagoland area. I work basically throughout the whole country. You can hear me on WYLL radio in Chicago, weeknights from 7:30 to 8 p.m. You can hear me on WIND Radio Chicago, Saturdays from 7 to 8 a.m. It's the Mortgage Update with Dan Frio. Please check me out on Facebook. Check me out. Just Google Dan Frio, DANFRIO. If I can be of any help to you, please reach out to me. Shoot me an email at dfrio, which is FRIO, at parksidelending.com, or give me a call at 844-775-LOAN, and loan is 5626. I hate when people just throw that out there and then it's like you're trying to find on your phone where those letters are. So that's me. That's today's report. I hope you like it. God bless. Have a great night, and I will be back, God willing, tomorrow, same time, same place. See ya.